I'd love to hear a little bit more about sort of this tension. Anytime we're looking at investing through an ideological lens, there's this question of, okay, are we comfortable sacrificing returns for some other outcome, right? ESG outcomes, particular other benefits. Like, how do you guys think about that tension, right? Because it's there for sure in any ideological space. How do you all think about that, given the Christian lens with which you're evaluating opportunities?
Before I answer that, I will say that there is a group of investors that actually would argue those companies that are faith led have better returns than those that don't. And I don't want to camp out on it long, but I do want to cite there was a study. Now it's from 2012, so it's kind of ancient at this point, but it's by a CEO forum called C12 Group, and it's Christian CEOs. And they look at the growth of those companies versus secular companies. And over this time period, 95 to 2005 is when they did the study. They saw that annual revenue grew 3.6 times more or greater than secular companies, and profits grew 2.6 times. Again,
Wow.
and so some people will cite that and say, no, actually, what we're doing is we're getting better returns by investing. I mean, the danger there are a lot of dangers there, and so I don't want to camp out on that, but I do want to identify that because there are groups who would argue against what I'm about to say, and that is that when you invest with an ideological lens, there are times where it's going to cost you. You're going to maybe do things. Let's say you're underwriting environmental or companies that are thoughtful environmentally. Maybe they're not going to dump, they're going to have to pay for that, or they're going to have a better filtering system, a bag house on their facility that'll filter out things that are going to be, not manual or not legislated, but they're going to do it because it's better for the environment. So, so in our case, we try to separate these two things. We separate the financial return piece, and we separate what we call the spiritual integration piece, and we measure those separately, and we don't conflate them. And we recognize some of our members or investor members, they really are looking for this impact piece, and they're willing to take a reduced return. And then others are really about the return, but they also want to see the impact. And so that's why we separate it. And I would say there are companies that we invest in that have, on paper, it looks like they're going to have lower returns, but their impact is significant. And they're actually spending money on things, chaplains, et cetera, who maybe aren't going to affect the bottom line. Or maybe they will affect the bottom line because they create a better culture, right? So there's a lot of debate on that.
Yeah, I can imagine the intangibles here that contribute.
A quick note before we continue the conversation. Alongside the Diligent Observer podcast and newsletter, I also run an outsourced operations service specifically built to serve angel networks. My team handles things like initial screening, social media, newsletter prep, platform management, and a whole lot more. The kinds of things that either aren't getting done or shouldn't be done by busy community leaders. If that sounds interesting to you, send me a note. Now, back to it.
Say a little more about that screening and sort of the process of like sussing that out within a business. Because I imagine there's a lot about this that's pretty soft, right? So how do you, or that feels soft, from first glance, how do you suss that out and, put a score to something like this that is often personal and not explicitly included, in the day-to-day operations of a business?
Yeah. So on the financial side, we do something that's very similar to probably a lot of groups. We score it separately. We look at the team, the market and strategy, defensibility, et cetera, the financial model, and then the deal terms. So those are the four areas we unpack those. We score each one of those. They need to pass a minimum score for us to move forward in aggregate. And then on the spiritual integration side, which I think this underwriting or this concept can be applied to any kind of underwriting. And we score that separately. We don't conflate them, as I mentioned. And when you underwrite a non-financial impact, there's sort of a range, if you will, of how to think about it. On one end, you could say, let's say it's you want to underwrite women founders, for example. Obviously, that is a fairly straightforward. Are they female? We're going to underwrite that. Or do they identify with a particular belief structure, and we will underwrite that. In our case, we're not underwriting solely based on that. We go to what I would say the next step is, and that is this biblical worldview integrated in with the business in some way? And that's where we like to consider and actually score the companies. So we look at the values that they've documented internally or externally, and what have they written, not just in the application, but what do they have that's a little bit of a touchstone about how they're going to operate their business. The second would be the activities. What do they do that demonstrates the love of Jesus? How do they do that internally? Do they provide time off? Do they have chaplains internally? I mentioned that would be one option. Do they do things that care for the community in a way that actually might cost them money and a lot of time and interest? Do they address social causes like anti-trafficking, which is something that our group likes to invest in, anti-trafficking and other causes that defend human dignity and life? And so those are some of those things, and we want to see what they're doing, how they're spending their money. And then lastly, does the product or service in some way just show and share about who Jesus is in a way that is accessible to others? So one of the apps we invested in, or a company we invested in, is called Abide. It's a Christian meditation app. The CEO would tell me that he puts more people to sleep with the Bible every day than anyone else, because a lot of people would just turn on some scriptural meditation and then fall asleep to it. It was very comforting. So that would be an example of one where the product is very evident. That's not always the case. The other thing we want to make sure we avoid is someone who is proclaiming or, promoting Christianity, but not living out the practices. And, that's the most dangerous thing, I think, with any ideology or belief system, is the hypocrisy that I think a lot of people might sense there. And so we've done we've funded studies for companies to analyze, how does the team feel that the manager or the leadership is living out their Christian beliefs? And so that's been really helpful. And we do like to underwrite that or fund those kind of studies. The other thing is never hiring or firing based on faith, right? I mean, that's something we never want to see. We want to love all people, and we want our founders, fund managers, et cetera, to do the same. So anyway, those are a few pieces, but and then I would say the next step of intentionality is outcomes measurement. And you see this more in the environmental, or if you're funding education, you want to see, how many students are we graduating? What's the impact that we have? And so we don't do that, I think, because that leads to challenges and unintended consequences when you're talking about some sort of spiritual impact. But we're really looking at the activities that the companies do.
Thanks for listening to this episode of The Diligent Observer. I'm your host, Andrew, and if you're an angel investor looking for essential angel intel in 5 minutes every week, I think you'd enjoy my newsletter. I send my best stuff, interesting deals, and more straight to your inbox, so you never miss a thing. Subscribe today at thediligentobserver.com.